Hey guys, how you going? You're here with Beau, and you're also here with Kane Warwick. Kane is the founder of Havven. Really stoked to be here with Kane today. Again, touching base with more people in the Australian industry. So stoked in Australia to have so much skill and so much talent and people with so much background, and really just goes to show how much Australia is actually progressing in this space. So Kane, thanks for your time today.
Yeah, absolutely. My pleasure.
Really appreciate it. And why don't you give us a little introduction?
So I'm the founder of Havven. We are a decentralized payment network. We're actually launching on Mainnet on the 11th of June, so we're about a week away, a little under a week away, so we're super excited about that. So we will be the second decentralized stablecoin on the Ethereum Mainnet. So the idea is that we are creating a stable currency that people can use to make transactions, to pay for things, and to use on crypto platforms.
Nice. It's a pretty, it's quite a technical project actually.
It is.
I'm certainly no OG in the space, but even reading through the documentation, there's quite a bit of tech actually behind it.
Yeah, it's interesting because it's a hard problem to solve, but one of the challenges is also to make it as accessible as possible. So you're trying to abstract away all the complexity. It should just ideally work for people, right? They should be able to just transfer a stable coin and know that the value is going to be stable without necessarily worrying about all the mechanics underneath it. But it's a challenging problem to solve, and that's why we're seeing so many people try to solve it.
Yeah, it's really interesting. So I guess before we get right into Havven, which I'm definitely keen to get into,
sure.
You've got a really interesting past. You've been in the space for a long time, as we were speaking about earlier.
Yeah.
Very few people do. So you're also the co-founder and CEO of Blue Shift.
That's right.
As well. You're a council member for the ADCA. So I'm curious to know, where did your personal journey into cryptocurrencies actually start?
Well, it actually goes all the way back to 2010. I used to be on a forum called Slashdot. I joined it in like 1998, and so they followed all kinds of tech progress and interesting things in the space. And I remember reading the Bitcoin white paper back in 2010 and going, I don't really know about this. Which is, a lot of people did that, right? There were a lot of people who were skeptical, can it work? And I just wasn't sure if it was really viable. And then it wasn't until about 2 years later in 2012 that Asher from CoinJar and I started talking. I was running an online retail business, and we were looking at using Bitcoin for payments. But we got to a point where eventually we realized that because our margins were so low, the volatility was going to be too high in Bitcoin to sort of make it viable. So this is pre-Ethereum, a lot of stuff, and we kind of just parked it and said, okay, it's not really ready yet. And then in 2014, after I'd shut that business down, we launched Blue Shift. And one of the first use cases of Blue Shift that we identified was crypto payments, to allow people to get fiat into crypto, because it's funny, because crypto transactions are immutable, you can't use credit cards because credit card fraud becomes a really big challenge, right? So if you pay for a Bitcoin purchase using a Visa card, or you allow people to do that, it's very easy for them to claim that it was fraudulent and the money will be returned, and so you lose the money because you can't get it back, right? And so in the early days when people were initially using credit cards to purchase Bitcoin, there was tons of fraud, businesses just got blown up and all kinds of crazy things. So we had this idea that if you could just hand over cash for crypto, both cash is immutable, right? That's why Bitcoin's an electronic cash system, is that immutable cash aspect. So that was what really got me into the space and really started focusing on it. And that was sort of back in 2015.
Wow, that's crazy. So reading the white paper back in 2010.
Yeah, absolutely. And not getting it though, not getting it. I can't claim to have understood and seen the value of it. So.
Oh, I'm sure you're probably one of the few dozen that would have read it that early. So, mate, you've been founding internet companies. Had a little bit of a look into your background since as early as 2009.
Yeah, that's right.
I believe with Pouncer.
Yeah, that's right.
.com.au being your first. So, given your experience, you have a lot of experience in this space. What analogies do you see with cryptocurrencies and blockchain today compared to how the internet space was back when you were founding those companies?
So the first startup that I worked for, I didn't found it, but I worked for was in 2000 in Seattle, which was a payment startup. And I think the interesting / funny thing, looking back, in the early 2000s, creating a startup was just how hard the infrastructure side was. So when we created Pouncer, we were paying something like $2,000 a month in hosting fees. We had this crazy co-located server that I had to help to sort of configure to just enable the platform to even work. These days, you just click 2 buttons, you can have an AWS instance, and it just works, right? Yeah. And I think that's very similar to where we are with crypto at the moment, where everything in crypto is a hard problem. The infrastructure is hard, building things on top of it's hard. There aren't platforms yet that make things easy. It's getting there, but if you want to build a crypto project, you have to build everything yourself from the ground up, right? Which was kind of similar to when if you go back to the early 2000s, trying to build a website or whatever, you had to build all the infrastructure, particularly if it was going to be a highly performant system. So what I guess we sort of are starting to see is a little bit of that infrastructure building up, and it's getting a little bit easier for people to build things on top of it. But we're still a long way away from the AWS one-click everything sort of magically works place that we are now with building internet businesses now.
I actually had someone comment on one of my videos last night. It's funny, some of the oldest videos I have, people still go and watch them and comment on them. And this lady watched one of the videos on an overview of exchanges, and she said, wow, this is so technically difficult. How am I expected to be able to do this and actually buy some? And I thought, she's right.
Absolutely.
It is very, and even this morning I was talking to someone and they said, I don't get it. And I say, that's okay. Like, this space is so technical. Yeah. It's not easy. And you combine finance, economics, and everything in as well.
Yeah, absolutely.
It'd be interesting to see how the space evolves over the next 5 to 10 years.
For sure. And right now, you have to almost be an engineer to be able to do anything in the space. Even to interact with it, right? It's really hard. So we still don't have the tools and the interfaces to make it easier for consumers, let alone people trying to build in the space.
Yeah.
It's very challenging. It's really challenging. So, but that's what makes it exciting, because that early period you can kind of get to define how things work out, and that's why we're excited about building a protocol that people can build on top of. So we want to build something that will make things easier for other people. So if you want to create a platform to allow people to make purchases, we don't want you to have to create your own currency. That just doesn't make sense, right? You should be able to take something that's existing and use that
and
actually build the business that you want to build on top of it, rather than having to build everything from scratch. So that's hopefully a place that Havven will play.
It's exciting times.
Yeah, absolutely.
So tell us a little bit about Blueshift. And you've sort of touched on how the idea came about, but tell us about kind of the progression from what you were doing before into the crypto space with Blueshift, and actually how that evolved.
So Blueshift is a platform that does a lot of things. It handles logistics, it handles various payment systems, it handles retail purchases, but what I saw in late 2015, early 2016 was crypto coming back. We went through crypto winter, and crypto was starting to, Ethereum was starting to gain a lot more attention and interest and excitement. And so we made the decision to put a lot more resources in Blueshift to get as many of the exchanges as we could on the platform to be able to use it. And so by the time we got to early 2017, we had 6 or 7 exchanges on the platform, and we were really focused on crypto as a revenue stream within Blueshift, and we saw that we've had a really strong product for crypto exchanges. So that is what really kind of drove me back into the crypto space and really focusing on it. I started investing in some token sales, was holding some ETH and some Bitcoin and other things, and just got more and more interested. And I got to a point where I really felt like there was an opportunity to solve some of the harder problems. And one of the problems that I identified, was this idea of volatility. How do you solve volatility, and how do you do it in a way that's not centralized? Because I think it's really important to sort of note that yes, we have Tether, and yes, it solves the volatility issue, but it solves it in a way that's very hacky. You know, it's not a decentralized system. It's not really that crypto. It's kind of a hack around it. And so I had this view that if you could solve that problem of volatility in a decentralized fashion, that it would be really valuable. And there was really only at that point one project working on a similar thing, which was MakerDAO. So you know, it was a very open space at that time.
Yeah. That's really interesting. So that's probably a good transition into Havven, and you've obviously touched on it quite a bit already. So the ICO concluded back in February.
Yep.
You guys raised 30 million in just a couple of days.
We did, yeah.
Smashed it. Tell us about the experience being the founder of actually launching an ICO. What were some of the challenges, and I guess what were the lessons learned actually going through that process?
I think the challenge with, you know, I've been raising money through traditional means for a long time, and I think the challenge with raising money through a token sale is that it's a process that I guess is so compressed. You know, when you're building a traditional business, you start off, you get seed funding, might be a few $100,000. You go to Series A, Series B, Series C. All of that kind of unfolds over 5 or 10 years in a lot of cases, until you get to a point where maybe you're acquired or you go through an IPO. In a token sale, you know, all of that for us was compressed into about a year, and really the sort of last 3 months was really compressed. And so everything that you're doing when you're trying to build a project, you're trying to execute, is the stakes are so much higher. And so that just makes everything a lot harder to do than in a traditional business, where you can iterate, you can take time, you can go through things. But the flip side is, and I think the payoff is, that once you go through that process, you've got the resources to deploy, you've got the funds to deploy to actually build out the platform as you see it. And it gives you the freedom to actually go and build something. You're not as constrained as you are in traditional VC raising, with the expectations of investors and immediate returns and all that sort of stuff. You can actually take your vision and really implement it, because you know you've got the runway that's going to last you 3, 4, 5 years. So it's a much freer position to be in, I suppose.
And how do you protect yourself from the volatility, obviously, because you're receiving crypto? That must be challenging. Do you hedge?
It's interesting for us. Obviously we finished the sale. ETH was at 870. I think within 3 weeks it was down around 500, and then got all the way down to 350. We actually weren't really that concerned about it. Our burn rate is not that high. So for us, we're very long Ethereum. We're not that concerned about trying to hedge. I know a lot of projects that got ETH and then just liquidated it straight away and converted to fiat. I feel like that's a bit of a strange behavior for someone who's building on top of a decentralized platform. So my view is very much that I'm confident that Ethereum will scale. I think Ethereum is going to be one of the most successful platforms. Not to say that we won't interact with other platforms. We're definitely exploring it. Every blockchain, I think, needs a stablecoin. But ultimately, you need to have some skin in the game. And so the majority of the funds we've kept in Ethereum, and we haven't been concerned about it, because it's a long-term process. It's not a short-term process. So.
Yeah, that's cool. It obviously shows a belief.
Absolutely, yeah. It's a bit weird if you just go and liquidate into fiat. You're like, we don't like fiat. What are we? What are you guys doing? Right?
It's a fair point. It's a fair point. So, touching on the stable coin now, obviously, you touched a little bit on Tether before. I've looked into Tether as well. It is an interesting setup. Obviously, people have looked into it. And there's a couple of, I wouldn't say red flags, but people have been interested in how the back end of it actually works. Where did the idea for you come about for a stablecoin that actually was backed by digital assets in the way you've done it?
Well, it was really looking at the problem and trying to solve it. And I think, having been involved or aware of crypto for a really long time, I'm probably more across some of the historical things that happened that preceded Bitcoin. So there were digital currencies that were attempted to be created, and some of them were more or less successful than others. And I include PayPal in that. The guys that created PayPal initially were trying to create an internet currency. Once the internet existed, people realized that you needed to be able to transfer value on it, right? So this idea of how do you create a currency that can allow you to transfer value, that is not centralized, that isn't controlled by anyone, can't be manipulated, was a really interesting problem. And it's been a problem since the internet existed, right? Bitcoin's just the best solution we have to that problem. The challenge with Bitcoin, obviously, in transferring value is the volatility makes it really hard. So it's a great speculative asset. It's a great store of value in longer timescales. But as a medium of exchange, it's not great. And so, my view was that attacking the problem from what we're actually trying to solve, which is to maintain decentralization but also solve volatility. And that's a much harder problem than just saying, let's take a bunch of dollars, put them somewhere, lock them up, and then issue tokens against it. That's a practical solution, as in Tether. Tether's a very practical solution, but it's not a long-term solution. It's a short-term solution until we have something better. And so this idea of how do you back something, how do you create a crypto asset that allows for transparency, trustlessness, decentralization, but that is also stable, is a really hard problem. And so the approach was that we needed crypto collateral, but we needed it to be distributed, and we needed a way to create a collateral asset that was going to have an intrinsic value. And the view was that intrinsic value would come from the network and the fees within the payment network that we were going to create. But it took a lot of iteration and a lot of thought to kind of get to that problem. I went through a lot of dead ends and a lot of really bad ideas to get there. But because I had that ultimate goal of we need a decentralized solution to stability, I was just trying to work through to solve that problem.
Yeah, and you can definitely see, reading the white paper and stuff, you can see that the effort and the energy that's been put into that. Didn't this come overnight?
No, it was a lot of arguments and late nights and stuff between myself and members of the team. Even now, this is still a very experimental space. There's still things we don't know, and we probably can't know until we sort of see what happens over the next 6 to 12 months. Yeah. So we still have debates and disputes about different aspects of the system and how it's going to work and what the response will be. So we're very excited about people experimenting in the space. It's great.
That's cool. So how's the technical implementation going so far since your ICO? And what have been the biggest challenges so far?
Ironically, it's been fairly smooth, and I think your previous point kind of speaks to that. We spent so much time on the mechanism design and sort of specifying exactly what we're trying to build that the implementation has been much easier. We've understood what we were trying to build, and building those smart contracts, while it's still a challenging technical thing, it's actually the mechanism design that's harder. And so for us, being a week away from Mainnet launch, we've been through the audits where we're very comfortable with where we're up to, and we're pretty confident in the system. We've got a lot more of a sense of how it's going to work, and we've also been through the EUSD phase, which was like our provisional stablecoin that we created, and a lot of that work has been reused. So it hasn't been as probably technically challenging as as it might have been if we hadn't had it as well specified. But I think there's still some technical challenges, like multi-currency support is something we're looking to implement, and that's going to be a very difficult thing. We need to design a mechanism for that. So there's some future things that are going to be pretty challenging, but at the moment we're really confident in what we built.
Okay. And so I'm curious from your perspective. So I only had a little look into Make It Die. I must admit I didn't put as much time into it as I did into your platform. But how does Havven differ from that?
We're actually quite close in this sort of stablecoin problem space. Maker and Havven are fairly close. So the idea that you're going to build a collateral backed solution is probably the fastest path to market. It's the simplest approach. And so for Maker, the big difference is they use ETH and eventually other assets, whereas we actually have a circular mechanism that uses the fee from the network to actually create a collateral asset. So the big question is why? Why not use ETH? Why not use Bitcoin or some other asset? And the answer for us is it's really important you have scalability. So right now you've got Tether with a $2.2 billion market cap, or $2.3 billion. Maker has about 40. We need something that's in the hundreds of millions in order to take on Tether. Exchanges are not going to migrate to another platform until there's something that is significantly better. And in that respect, you need to be scalable. So the challenge for Maker is getting people to commit lock up ETH to issue DAI. and the incentive mechanisms are maybe not that strong. Whereas with Havven, the incentive mechanism we believe is very strong, because when you lock up Havven, you're rewarded for staking the system and collateralizing it with fees. Those fees should have a sort of compounding effect, so that people are encouraged to continue to do that. It builds up the network effects grow, and the collateral value grows. And as the collateral value grows, we can issue more currency. And so even though it is a circular system, we believe that it's circular in the same way that a closed loop payment network can kind of grow and scale up, like PayPal has and American Express and a whole bunch of other solutions.
Interesting.
Yeah.
So, based on my experience of crypto so far, I think one of the biggest challenges is actually onboarding people. User acquisition, right? Actually making platforms simple enough that people don't need to understand blockchain necessarily to get involved. It's really seamless for people. They need to be able to open up an app and say, this is just as easy as what I've been doing before. So based on that and kind of what I have seen, which is where probably a large percentage of people that get into crypto then invest. When we look at Tether, it has significant trading volume at the moment. I think it's probably mostly used by traders.
Sure. So
again, I see user acquisition as probably one of the tough ones. What's the strategy for Havven and the stablecoin to actually get it used in the real world?
Sure. I think there's two elements to that. One is that in the short term, it's going to be crypto people that will be using it. It'll be a tool for crypto people. One approach that we've got, though, is that we're building a protocol. So like Ethereum, like 0x, like a lot of the protocols that are being built, they're built as a tool for other people to build on top of. And so what we're hoping to see is projects, and we're already starting to see this. So Intimate, another Australian crypto project, are building on top of our protocol. And what that will allow them to do is for their users to have a very sort of seamless and easy to use experience, because they don't need to worry about volatility in the currency when they're making purchases. They'll just be able to trade in USD as if it was fiat, but they'll get all the benefits of crypto. So what we're hoping to see is more and more projects building on top of our protocol, and then it'll be their users that are actually interacting with it. But again, as I said, you're trying to abstract away all the complexity, so they don't need to think about it.
Yeah.
And again, it's still going to be a very crypto heavy project for the foreseeable future. But as these projects that are building on top of the platform and building on top of Ethereum start to gain traction and get real world adoption, that's where we'll grow with them. So it's a long-term process.
And I think that's what I tell people a lot too, is that's actually the exciting thing about crypto, is how early it is.
Yeah, absolutely.
We've got those analogies of where the internet was, and hearing from people like yourself that because it is so technically challenging at the moment, for anyone involved in this space, whether they're investing, whether they're a developer, whether they're looking for opportunities, it's so early.
Totally.
The time is now.
We're still so early, and you can tell when you look at the infrastructure and you see just how sort of new it is, and there's so many rough edges. It's so hard to do stuff in the space. What we need to do is get to a point where you look at things like the App Store. The App Store, all of the complexity of distribution and everything, it's all taken away from you. All you need to do is go and build a great app, and you've got great tools to actually build those apps, React Native and Swift and things like that. So everything is made as easy as possible to actually build that thing, and then go and get users, acquire users. You don't need to worry about the hardware, and you don't need to worry about the platforms and distribution and all of that sort of stuff. And we're just not there yet. And so that to me is really the most obvious demonstration of how early we actually are, because we don't have those tools. We're probably still 2 years away from having even some of those rudimentary tools to make it easy for people to come and just build crypto platforms.
Yeah, that's crazy stuff. So I guess just leading in the last few questions, I'm interested in your perspective, given how long you've been in crypto. What's your take on the current market at the moment? So we've had kind of a drawback since this insane boom that we had over Christmas time. Things are really sort of going sideways. I feel like the market's kind of cleansed. A lot of people I've got now. That's one thing I've found. What's your perspective on it at the moment?
I've been watching crypto prices for a long time, and I think after a while you do become a little bit sort of inured to it. You just kind of, you don't even think about it, right? But you know, as a project that's building for the long term, you know, we're obviously concerned about sort of the viability and some of these, you know, scaling problems, things like that, more so than the price. But I think that when you look at investment in the crypto ecosystem, it's an important metric. And what we want is to be encouraging people to come into the space. And so investment in the space and money coming into the space is a good signal for people to come and build in that space. In the same way that we saw with, you know, machine learning and artificial intelligence startups in, you know, the early 2010s, right? And virtual reality systems. When institutional money indicates that this is a good place to put your effort as an entrepreneur, then people will go into that space, right? And I think the fact that we're over-investing in crypto right now, and yes, there is a lot of irrational exuberance and you know, there's a lot of unreasonable expectations right now. Eventually the space will catch up with the expectations. You know, delivery will catch up, and we're already seeing that. There's all kinds of great projects that are starting to deliver. I mean, in the last 2 months, we've had more projects deliver and actually, you know, deploy on Mainnet than we had in all of last year, basically, right? So I think some of the you know, we're catching up with some of the hype, and I think once we start to see, you know, scaling solutions and all that stuff come to the fore, the price will take care of itself. You know, we're talking about an industry that has the potential to be, you know, worth trillions and trillions of dollars. And yes, we probably got a little ahead of ourselves, and people got a little bit too excited, you know, in terms of how close we were and the speculation. But there's no question, in aggregate, the space is undervalued right now. Even Bitcoin is, even if you forget about everything but Bitcoin, Bitcoin is a store of value and a replacement for gold, or, you know, somewhat of a replacement for gold. You could still go up 10 or 20x where it is now in terms of market cap. Forget about everything else, right? So, you know, that is, I guess, indicative of, yes, it's probably hard to pick winners in the space, but the you know, the overall ecosystem, in my view, you know, is we're behind in terms of delivery, but in terms of the speculative value, I think that there's a lot of upside.
And it's, you touched on the point then about how you sort of become immune to the price. When I talk to people about the price, and I often get pulled up in the street, people say, "Oh, you know what's happening with the market?" I feel like I wish I could show them a window of how much was going on behind the scenes, and that people really in this industry don't talk about the price because they don't. It's not what they don't worry. It's in the back of their periphery.
Of course, yeah.
And what is the energy, the human energy being put into this space is just phenomenal, and it's only growing.
I think the one of the best indications for me is if you take you know, any chart, right? Like, you know, we have this view, I guess, that at the start of the year, crypto always has a bit of a downturn, right? And if you look at the start of every year, there's, you know, this little up and down, and every time when you kind of go back and go all the way back to 2014, 2013. Same thing, except the scale is so small, right? So when you actually zoom out, all of a sudden you see it was nothing. You know, it's just it's a straight line, right? But at the time, everyone was freaking out, just as much as they are now. Everyone was like, "Oh, it's, you know, what's happening? What's going to, you know, where's the market going? It's over." There are people saying Bitcoin's dead. I mean, we've kind of, you know, gotten over the you know, Bitcoin's dead thing. But if you go to the website that tracks all the times people have called Bitcoin, you know, dying off. It's always there, right? You know, it's always there. There's always this view that, oh, okay, this is the end, right? But every single time someone calls the end, it recovers. So, so I think you get a bit of a longer time horizon over time. You know, you become a little bit more accustomed to just writing it out and hodling, right? That's like ultimately, you know, if you sit there and you hold, you know, it's been a good strategy for a long time. It's unlikely that strategy is going to become a bad strategy just over the last 2 months.
You know, and I take a lot of examples from the stock market. You know, I say to people too, go and look at the stock market over the past 100 years. What has it done?
Absolutely.
Just does that.
Because exactly right.
I see a lot of analogies there.
I know, exactly.
So, based on your experience, you're in Australia, you're launching a project in Australia. Australia seems, certainly from my perspective, to be absolutely killing it at the moment in the blockchain space. Where do you think Australia ranks in terms of the global rankings and in, I guess, the overall industry, the quality of the projects and what we're pushing out?
I think we've got you know, there's what 100 projects that have raised over $30 million, right? And so, you know, between us and Power Ledger, we've got 2 out of those 100. So on raw numbers, you look at that and say we probably still have a ways to go. But I think Australia over-indexes massively in a lot of things, in a lot of technology adoption. You know, we're the highest prevalence of like tap and go payments and things like that, right? And you know, working in Blue Shift, we've seen that. We've seen the adoption, we've seen the excitement, and people, you know, people are really open to new technologies in Australia. And so I think that over the next 6 to 12 months or 18 months, we'll see more and more people who are great founders who might be doing something else will look at the crypto space and look to move into it. But it's still going to take time. It's going to take time. I think the biggest thing for me, though, in crypto is that you have access to global capital that you otherwise don't really have access to in Australian traditional startup fundraising. So I think that will allow people to stay in Australia. We've got a lot of amazing founders. They just don't live in Australia. You know, a lot of them live in San Francisco. They live in Europe. They've moved out of Australia because they wanted access to, you know, larger markets or whatever. I think you know, the crypto markets, there's the possibility to allow people to actually base themselves in Australia because it is such a global industry, and we actually might retain some of that talent here more effectively, which will be great because then you build an ecosystem, you've got founders who can mentor people, and it creates those network effects. But, you know, we've had a lot of brain drain over the last 20 years. A lot. So, you know, it's going to take time, but it's exciting. It's very exciting.
That's cool. So, mate, that's pretty much all I've got. I guess I'll hand it over to you if you want to cover any specific developments coming up, even anything exciting, anything coming up that you want to tell people.
I mean, you know, again, as I've mentioned, 11th of June, Mainnet launch. It's super exciting. So we're less than a week away. We will have only the second decentralized stablecoin on Ethereum Mainnet, and that, you know, is going to just open up so much opportunity for us, you know, for the ecosystem. So we're incredibly excited about that. So obviously, you know, follow us on our socials and everything. You see all the announcements. We've got some exciting competitions and stuff around it to generate some interest. But it's a really important problem, and, you know, we're really excited to be solving it.
Awesome.
Excellent. Thanks so much.
Yeah, thanks, Kane. Appreciate your time.
Thank you.
Cheers.
Thanks very much.
Hope you enjoyed, guys.
Thanks.